Welcome to Trading Lounge and the gold and silver report. It's just going to be a quick update on this current low here and what risks are looking at us. So as we know, we've been looking at the US gold 4-hour chart here as a wave 3 here, and then an A and a B and a C wave here for wave 4, and that would have us completed at this point and pushing up from this low here. Now, one of the things that you can see here is the 1900 here is such a good support here and is being retested as the resistance now. So if it's going to fail, that's where it was going to fail from. And if we needed another wave count to take us lower, then we would need to change things around a little bit. And it would be like this here with wave B over here. Just remove these for a moment here, and looking at this here as wave 1 here and 2 here, and wave 5 would move here. This would be wave 3 and wave 4 here. So that would make the wave 2 here, roughly speaking, and this one down here at the 38.2% retracement level, which comes in quite close to the 1900 here. So this is a real possibility, and one of the reasons that makes it a possibility is that silver. So if we just have a quick look at silver for a moment, because we also talked about having long trades with silver as well. So with silver here, we can look at, well, wave 3 here. This is a 4-hour chart, wave 3. The A wave here, then an A and a B and a C wave here for the B wave here. And we have talked about this being a D wave and an E wave here for the B wave, like gold, and having 5 waves finishing here at this point. But because this has dropped lower than gold has, gold was up higher here, it does present a good case, and obviously we've talked about this before, but wave 1 here, wave 2 here, and then the 5 waves coming down here for wave 3 here, and then wave 4 here. So in this case here, from that wave 2 to that wave 3 low there, we're really at the 38.2% retracement level here already for this. And we do have a nice pattern in terms of an A and a B and a C wave here for this. So if we just take a closer look at this for a moment, we started to look at this before on the 15-minute chart, I think. So on the 15-minute chart here, all my Picasso drawings, so we can just clean this up a little bit here. And what I would like to do is just point out this ABC correction here and where we're up to with it. So, I mean, it's a good indication of how, missed things are, but it's always room for improvement, as my wife tells me. So we can look at that. 1, 2, 3, 4, 5. That's correct to that point. And this would leave this as 1 and 2 here, and then all of this is the 3rd wave, I think, and 4th and 5th. So we're very close to this. So this would make, really, if I just move this around here, that would be the A wave, the B wave here, and 5 waves up for the C wave. Quite close here. I'm not sure if there's any more with that or not. I need to pull that apart on a tick chart, but it could go a bit higher. But all I'm saying is we have 5 waves up here for the A wave, the B wave, and the C wave here. So yeah, well, that was about the right long positions that we put in there. So we can put this over here as the stop for this. I mean, what I tend to do is I tend to say to myself, well, we know the 38.2% retracement level is really quite here somewhere. So if we gravitate over to the closest largest number, which is this one here, the 24, then we can use that. If this market finds this as support, then we can go higher from that point. As support, I don't mean that the market comes up and has the high above the level here. We'd still need that classic trading levels pattern sitting here for this. So that would tell me that it's being tested. That way we'll be above the 38.2% retracement level. So we'll be out of, let me just put this in here. I think taking a percentage there and having quite a wide stop, then that would be it. Okay, here I don't think that if it's going to be bullish, it should really stay. We shouldn't. If it's going to be bearish, then the 2350 will become the retested resistance, and then you would need to look at it moving down from that point. It would need to come through here, go back and test it. Then you've got your reference point low here, and then you'd be out at this point. So that's why I'm putting this roughly here for that. But locking it up a little bit, because this is the risk area now that we're in. Once we're over that hill and we've got support here, then we're on the right track. But we don't know that just yet. So coming back to the 4-hour chart here and just reviewing that a little bit. So yeah, 38.2% comes in here for that. And we've got that 3-wave correction. So we can read this as 1 and 2 and 3 and 4 and 5. So we just need to either drop down into this space here, and then we go up from that point, or we just go up from this point. But I wanted to make the video to point out the risk here and how quite nicely it does count down here for this as an A wave, an ABC here for the B wave, down for 1, ABC for 2, and then 5 waves down here. So anyway, something to think about. So just see this much lower here from this top here. When we compare that to going back to gold now, we'll see how a little bit higher it is here. We do have a nice 3-wave move in through here for this as well at this point. And we can count this down as 5 or being corrective as well at this point. So it does suit both cases. But I just today wanted to point out we're facing a risky point, and I needed to highlight it in this space for this. So yeah, 38.2% retracement level from here to here is at the 1900. Let's just go into the hourly chart here for a moment. So we've been trading down, we've taken profit here, and now we're turning up to go long at this point. But unfortunately, realizations have come across the screen, and we can be at risk in, well, anywhere up into from here onwards into this space here for this. So one of the things that I do just normally start things just to get an idea where things are is I always, that might not be the high, and you can readjust that and do better than that, but it gives me that 61.8% down here at this point, and that's sitting below the 65 of group 2 there. So I'm thinking to myself, if I was going to hold through this, or in part, then I really just want to be under the 61.8% here. So 1862 would be, or just below 1862 would be good. And then if we're long here, and just hindsight here, this was our second high, so this is the one that you could have gone long on at this point. And this move up through here, that means we're at 880 here. So where are we with the S&P 500? Just let me double check on something for a moment, because this trend up is working together on that. It's stretching up quite nicely, isn't it? I'll just see if I've okay, right, I remember where we are. So at the top of a 3rd wave here, a 4th and a 5th to get up there. So we've still got next session with that, so that's okay. So we've got another session of pushing higher. We may get a sort of corrective move through here. So it wouldn't be a bad idea to take a percentage in this space here. So let's just talk about that for a moment. And not to say my way is the right way or anything silly like that. We're just chucking ideas around, you know. So So between 1890 and 1900 here, we want to take some profit off the table here for that. Yeah, and what we're also, we still need to manage that better. Also, what we need to do is we need to wait for the 1900 now to become the support. So we'll be looking for something like this here to go long again over here for this. So we can trade to the 1900, get out, look for some, this is probably too big, but it's just animated a little bit, you know, it'll probably be little stuff like this. In fact, this will probably get mirrored here rather. Can we get any closer? Just have a little look. Oh, we'd have to call this wave 1 and 2 and 3 and 4, and then 1 and 2 and 3 and 4, and 1, 2, 3, 4, 5 for the fifth wave. So, you know, it's just not showing me, you know, if this is wave 1 here and 2 here, this move here would have to be wave 3. It's a bit, I mean, it's off hours, so that's something, isn't it, I guess? We take that on board, but we'll just keep an eye on it. It's looking a little bit sluggish compared to this move here. So, we definitely don't want the market coming down and going below here at this point. In fact, we don't want this dropping from this high here to this one here at 61.8%. We can allow it to come back down to the wave 4 here, around the 50% here, but we don't want it testing 1870 again. So we could move the stop up further, up into 1870. That helps it out a little bit. Let's reduce the risk. That's what I'm trying to do here. See if you can reduce it a bit further, not by moving the stop here, but adjusting this here. Maybe do this in 2 parts, some here and some here. That's if you've got 3 contracts at minimum, you know, I mean. Yeah, we don't want that low bit. I mean, currently this is in 3 waves to here. We're looking for 5 waves here to line up with the S&P, so we'll just lift that up into that closer to the 1900 area through there. And in the meantime, you don't want it dropping. This is 65, 72 and 80, so 72 here. We don't want to see that as the retested resistance. At that point, we need to be out of this trade, so we just keep it really minimal at this stage. Okay, so just to recap this, going back and, you know, seeing all the pictures that we've done for the silver and the gold here, this is the weak spot at 1900. It can be a wave 4 here. It can fail from here as an A and a B and a C wave here, and then move down from that point. So we need to navigate that, and we're going to navigate it by adjusting the stop, taking profit, and then waiting for the setup on the other side over here. If that becomes the setup here, then also look to scale in at 10, 20 and 30 through here as well. This is all of group 1, and that's what we do with group 1 here, because we'll be on our way at that particular point. So, yeah, sorry, just a spanner in the works and a little update. Thanks for tuning in. Cheers.